Prepare yourself to feel the pinch of your wallets tightening even more. The Bank of Canada has raised its key interest rate again to 4.75. It's a move that some people in the financial world didn't expect so soon. Many believed the central bank would wait a little longer before pulling the trigger. This is now the first increase since the hikes were paused back in January. But unfortunately for us, it may not be the last one. There could be another climb coming our way this summer. Manisa Danabalan joins us now with more on this. Hey, Manisa.
Hey, Kelly. Many of us thought we wouldn't see another hike, but here we are at 4.75%. The interest rate actually hasn't been this high since 2001.
More money, more money, more money.
Another day, another dollar. Or should we say another 25 basis points? The Bank of Canada raised its key interest rate 0.25% to 4.75.
Oh, no.
The jump came sooner than expected in order to clamp down on inflation. It was slowing down until April, which marked the first rise since last summer.
They cannot wait for July because people then will start. If inflation keeps rising and is persistent, people will then raise their expectations of what inflation will be. Producers will start charging more for their goods. And then employees will start demanding higher wages. And then you go to this upward spiral of prices and wages.
In a news release, the Bank of Canada said based on the accumulation of evidence, Governing Council decided to increase the policy interest rate, reflecting our view that monetary policy was not sufficiently restrictive to bring supply and demand back into balance and return inflation sustainably to the 2% target. The aggressive rate hiking cycle began in March 2022, and the central bank says it expects inflation to fall about 3% this summer, hopefully bringing us closer to that 2% target.
Am I confident they will reach 2%? Yes, actually, over a long period of time. Operationally, of course, will they get to 2 in the next year? I think they do a happy dance if they reach 3.
But many of us are probably asking the question, why another increase after announcing a pause just 6 months ago in January? The Bank of Canada points to a few reasons, saying excess demand in the economy appears to be more persistent than what they thought. This includes a tight labor market, better than expected economic growth in the first quarter, and inflation which came in hotter than expected in April.
Largely speaking, everyone is just spending money like usual. This is partly because mortgage renewals have not always kicked in. We're in the effect of the post-pandemic. Many Canadians, I think, are just tired and want to go shopping, want to go traveling.
While the Bank of Canada continues to do its job to drive down inflation, which is going down, we will continue to do our job to be there to support Canadians who need it, with investments in things like dental care, in a grocery rebate, in supports for low-income renters.
The central bank says it'll continue to monitor the economy, but sadly for us, it doesn't seem like there will be a pause in rate hikes anytime soon. So get ready, there might be another jump coming our way depending on inflation.
Impossible to predict the rate of inflation. You'd have to tell me what is happening in Vladimir Putin's brain in Russia. That alone is a wild, unpredictable effect on the rate of inflation, affecting both food and energy.
The next announcement is scheduled for July 12th, so we'll have to wait and see if there's another hike, which means we'll have to clamp down on our spending even more.